All right, so let me share my screen. All right. We're going to run through the second part of the purchases cycle, which is making payments, returning goods, and receiving the corollary debit to your account. And then we'll spend a little bit of time talking about accruals and adjustments, because that's another important part of the purchasing cycle that's required under our obscure accrual-based accounting system. Come on, you're okay. There it goes. All right. So as we talked about when we began the purchasing cycle, the revenue cycle, which is what we started the system understanding on, and the expenditure cycle are mirror images of one another. Now we're moving to this piece, paying the invoices, and then processing the invoices, processing the payments, and paying our suppliers for our purchases. So I'd like to, when we went through the cash receipt cycle, I kind of likened this part of the process to flying on an airplane and how there are 3 ways off the plane, 2 forward, 2 over the wing, 2 rear exits. Now, since we're talking about how everything is equal and opposite, you can remember that there's an equal and opposite reaction in the payment cycle based on what happens in the cash receipt cycle. So in the receipt cycle, we would receive cash by way of a check or a ACH notice. Now we're receiving or issuing a check or issuing / authorizing an ACH payment. Before, we were updating the cash receipts journal and the accounts receivable subsidiary ledger. Now we're updating the cash disbursements journal and the accounts payable subsidiary ledger. And then at the end of the month, or whatever period we use for our accounting cycle, could be weekly, could be daily, we summarize our results and post them to the general ledger. So this is a document I use in the accounting, the auditing simulation we do in my graduate internal auditing class. It's a very real looking fake check. And this is technically an asset versus the blank check. So what makes this check an asset and a blank check just a possibility? What makes this an authorized payment? Did you all guess? Yep, the signatures is one of them. There's 2 of them here. Why do you suppose there are 2? We'll talk about the controls in a second, but why do you think they need 2 signatures to authorize this payment? Right. You usually, as a set of controls, have required dual signatures for checks above a certain threshold, or for checks written as part of a specific purpose. In this particular audit simulation, they have an internal control wherein any scholarship checks, which is what this pretend fake check is, have to be signed by 2 people awarding the scholarship. So we've got the 2 signatures there. Another thing that makes it an asset is the fact that it's dated. And as Melinda pointed out, it's got an authorized amount, and it's specified for payment to another party. Once those fields have been populated, that check can be, an evildoer can abscond with that check and deposit it into their account. So as we saw with the cash receipts process, the cash disbursements process requires a significant number of controls to protect cash, because cash is easy to walk away. The cash can easily walk away. So here are some of the controls related to the cash disbursement process. The first item is paying for things that you have not yet received. That could also indicate that someone bought items and had them shipped to themselves. So what are some controls do you think that could prevent that? Are the bells ringing? Right? They usually do that at noon. I'm like, it's not noon already, is it? So let's do, I'll throw these up there all at the same time. So some of the controls to keep, there's similar controls as we saw when we were doing the creating customers. Phrased a little bit differently. The control to make sure that you're actually receiving the document or receiving the goods or services that you ordered would be that matching process. We saw that on QuickBooks for the receiving side when we input the purchasing order, when we were populating the invoice, creating a budget for services so you know what type of service expenditures you can expect, requiring receipts for travel expenses, and then using corporate credit cards for travel expenses. And then, so duplicate payments. Requiring a complete voucher package. What are the 3 items that go in the voucher package? Do you remember? This is my new favorite thing. You've got the PO. The invoice is the second one. Payment precedes the payment. Yep, you're on the right track. It's the receiving report. I just figured out I could do that in PowerPoint, add the, so it's now my favorite thing. It is that, it's under Unit 7. I'm pretty sure I uploaded it. I'm 80% sure. I uploaded these slides this morning. So yeah, the complete voucher package, that's the purchasing order, the invoice, and the receiving report. Those are what's called a 3-way match. When you see that you've got the same numbers, so the same items purchased, the same items received, the same items billed, that's a good control. And it works well in conjunction with item number 7, which is cancel the supporting documents once paid. I was working through QuickBooks on Wednesday afternoon, I believe, and noticed that when you've received an invoice or when you've received the payment on the invoice, QuickBooks automatically denotes that, oh, hey, we're done with this one, as a nice green received payment. That keeps you from expecting duplicate payments, and on this side, it helps you avoid paying the same invoice twice. And then This one, usually I use bullets, but I wanted to use numbers this time to indicate just how many controls are best practices for protecting your cash. So physical security of blank checks and the check signing machine. I know that McMurray's lives over there in Mason, and only certain people over there in Mason can write checks. They only run checks on certain days of the week, and they precede the check run with all of those controls that we talked about before. Sequentially numbered checks or ACH authorizations. We talked about those before. Why are they an important component of the cash disbursement cycle? Why do we use sequential numbers for? Yeah. Exactly. It allows us to see when we use sequentially numbered checks or ACH authorizations, it allows us to immediately identify when something's missing, when something tries to get run through twice. And that allows us to better keep track of our cash. Limiting access to the terminals that can authorize electronic fund transfers. Using a dedicated computer and browser for online banking. Restricting ACH payments on bank accounts not used for payments. Our good old favorite, segregating the cash writing or the check writing function from accounts payable. We talked about this one a little bit when we were looking at the valid check, requiring dual signatures on checks above a certain amount. Having an independent person perform the bank reconciliation. Why do we want someone outside the process performing our bank reconciliation? What do y'all think?
It makes it less. Internal people do it, makes it.
Right, exactly. If the same person, exactly. If the same person who's authorizing the payments is also reconciling the bank statement, they can commit fraud and cover it up. If the same person who writes the checks is also reconciling the bank statement, they can commit fraud and cover it up, and so on and so forth. And then theft of cash continues onto the next screen. Restricting access to the supplier master file. Limiting the number of employees with the ability to create and process invoices from one-time suppliers. Why is that one a risk? In general, we talked about limiting the number of employees with the right and ability to create new suppliers in general. What's more risky about one-time suppliers? Anyone online? What do you think? What's risky about creating a single-use supplier instead of a supplier who's going to continuously provide you goods or services?
Can I try?
Yeah, go for it. That's Gabe.
Wouldn't it be a lot easier to deal with someone that you've already dealt with before instead of trying to do more research on a different person each time?
Exactly, that's part of it. Having a relationship with a supplier ensures that you're getting, oh, I'm missing one more there. Having a good relationship with a supplier means that you know what you're going to get in terms of quality, in terms of price, in terms of timing. And you've got that established relationship. But what else makes a single-time supplier more risky? Oh, thank you for that, Gabe, by the way. Anyone else attending remotely?
Oh, you said the credit part of it, right? That there's paid up people that have the bill. You already said that, right?
We did say that, yeah. Exactly. So we talked about when we were running through QuickBooks a couple days ago, how only certain people should have access to the chart of accounts, because if people are allowed to mess with the chart of accounts string, they can create a random account and hide stuff in that. Auditors know that when account isn't used very often, that's a risky area because someone could be hiding stuff there. The same goes for single-time suppliers. If you're just creating a supplier to use them once, the odds are good that it's not well, I mean, it's obviously not a normal situation if you need to use a supplier once, but it's also more risky because if you're just using them once and then forgetting about them, you're likely to use it as a front and then never use them again. Any questions about that? We used to, when I worked for Gap Incorporated, I was an analyst in the accounts payable department. And this was one of the, item number 17 was a regular analytical item that we would perform, as well as, well, is a supplier address the same as any of our employee addresses, such that they're creating fictitious suppliers and sending themselves payments for fictitious services? Are there suppliers with duplicated addresses? Because one of them is the good supplier, one of them is not. Anytime where something's a little bit amiss, it's easy to, not easy to commit fraud, but it's easier to commit fraud. I actually had to look up the term impressed fund, number 18. What that means is just keeping a small amount of cash on hand to limit the opportunity to steal the cash that you keep on hand, and keeping it locked up with only limited access to the funds. What's an alternative to petty cash, do y'all think? Exactly. What Melinda said, for those of you attending remotely, is using a purchasing card, having a credit card on hand. In some ways, that's a lot easier to manage because you have specific procedures in place to allow a person to get a company credit card. Those credit card receipts go to the purchasing office so that they have some ability to monitor those transactions and make sure that they're spending money appropriately, rather than just having access to a drawer full of cash that you can use when needed. And then finally, surprise audits of petty cash funds. The surprise element makes it easier to catch a person in the act. I know when I used to be an auditor for the federal government, we had a couple of surprise audit sites when we were performing our financial statement, or having our financial statement audit done for us. And what that prohibits is a fraudster covering up their tracks because they know the auditor is coming. When you just sneak up and say, hey, I need to see the petty cash fund, and I need to see the receipts related to the petty cash fund without announcement, they don't have the opportunity to cover their tracks. And then finally, some controls related to altering checks, keeping the check machines protected. using special inks and papers. You'll notice when we looked at that pretend check from my audit simulation, it had that watermark that you saw. They have, if you have a work study job through McMurray, you've noticed that, oh, their checks have that watermark in the background. They have a watermark on the back side. They have, when I used to go pick it up from Machen every other week for my work study job, you had to sign for it. All of that is to keep people from altering checks. And then I also had to look up a positive pay arrangement this morning. If you were to take a guess what that is, what would be your suspicion? Someone attending remotely, what would be your suspicion when you see the phrase positive pay? No. So Melinda's guess was ACH payment. Madison's guess was only putting money in and not taking money out. Any guesses from our remote audience?
I would have guessed what they said.
They said your guesses?
Yeah.
Yeah.
Yeah, but same thing.
C says the same thing as does Gabe. So what a positive pay arrangement is telling your bank which check numbers you've issued such that they agree to only pay those checks that you've told them to pay. So it's kind of like a matching control on their end. When they get the notice to, hey, withdraw the money for this check, they would look at their records and see, oh, we don't have that check on our payment plan this month. So that keeps people from creating fraudulent checks. Like I said, I was able to do that fake check that we looked at in Word based on, I found a nice template online. I found a check that looks like, I found one of my old, when I get manual checks from McMurray for reimbursement of expenses. I use that as a template. A positive pay agreement keeps people like me from, I found that font that looks like those special numbers for the bank, keeps people from cheating the system by figuring out how to make checks on their own. Right. Yeah. So now let's talk about returns and allowances on the purchasing side. We can do them here as well. And I ran through the system understanding aid on my own on Wednesday through QuickBooks, and we don't have any examples of this in our projects, but it's basically the flip side of the return and allowance process when we're selling goods. The process starts with us contacting our vendor and letting them know that we intend to return the goods. We would then ship the goods, indicating our shipments with a shipping report or a bill of lading. And then once our vendor has received the goods that we return, they would let us know that we're issuing a credit to your account or a refund or an allowance. Internally, we would generate a debit memo so that we could update our books accordingly, indicating that we no longer have to pay that amount. And then, as always, we would record those transactions in the appropriate journal, subledger, and general ledger. Any questions about that? All right. So the controls related to returns on our end are similar to the controls related to returns from our customers. The biggest thing that we're concerned about is segregation of duties, because just as having the person who deposits the cash receipts and posting remittances can abscond with the money coming in. We're concerned with someone generating a purchase order and then issuing the debit memos covering their own tracks for something they bought, and or updating the vendor maintenance like we were talking about, creating a single-use supplier and then using a debit memo to make that transaction just magically disappear. So any questions about that? Really, we're just, it goes back to that ARC acronym that we had. And that was, what was the A in ARC for? Yep, authorization control. R was, yep, record keeping. And then C was, there we go, custody of assets, exactly. Yep. Melinda and Madison are chuckling here in the classroom because they knew that one well for the second exam. So finally, we're going to close on the adjustment process. There's 3 types of adjustments you would see in the purchasing process. You would adjust for prepaid expenses, you would adjust for accruals, and you would adjust for depreciation. All of these deal with aligning what we bought with the period that we used it. So we're going to do examples of each. So this was similar to a CPA exam question I was studying the other day. Chick-fil-A franchisor, they actually do pay an annual franchising fee. It's due up front at the beginning of the year, but it covers the whole year of service that they receive from the Chick-fil-A headquarters. So initially, when we made that transaction, we recorded a prepaid asset, and here it would be that prepaid franchising fee. So as the year goes on, we would record and adjust away the prepaid asset that we're getting the benefit for. We would credit the amount of the prepaid asset that's now wasted away, and we would debit the franchise expense for the period that we used it. So that at the end of the period, our prepaid asset now shows a balance of 11,000 remaining, and we've taken that periodic expense of $1,000 in the month that we absorbed it. Any questions about that? Remote attendees, any questions about that? They're pretty, we did talk about the adjustment and adjusting entries at the very beginning of the semester. So now we're just looking at it in context of the cycle. So the next item that we're going to talk about is accruing for upcoming expenses. And this is an example of a transaction that you'll have as part of the closeout process for your system understanding aid. So I think our third or fourth, no, it was our 5th transaction number 5 in the system understanding aid was the borrowing of money from our bank. We borrowed $90,000, and in QuickBooks the other day, we posted that transaction to our system. And per the terms of the agreement, we're supposed to pay $49.50 of interest a year from taking out the loan, and then repay the loan as well as the required interest 1 year later. So we need to accrue for half a month's interest so that it aligns with the first month of holding that note payable. So we started out by, when we borrowed the money, we recorded a credit of $90,000 for the money we borrowed. And then as we're getting ready to, at the end of the period, we would record a credit of $206.25, which is 1/2 of 1/12 of so it's 5/12 per month. And we're recording 1/2. Bless you. We're recording 1/2 month. So you can check my math on it. I did it this morning with a calculator, so I'm relatively confident in it. So we're creating a placeholder for the interest we're going to owe the bank at this date. And then to match up the expense with the period that we are recording that interest, we record a debit to interest expense. And again, that's to make the matching principle hold out. We want our expenses to line up with the time we're getting the benefit from those expenses. So any questions about that? All right. So finally, the third category of adjusting expenses are recording the periodic depreciation. So here, I didn't put the bullet down here, but let's assume that our total balance of fixed assets is $10,000. We're depreciating that over 5 years. 5 years. 0 salvage value. Salvage. And that means that our annual depreciation expense is $2,000. So some companies record depreciation monthly, some record it and adjust it at the end of the period. We're assuming that we're adjusting at the end of the fiscal year where we've been using the asset. So we would record a credit to accumulated depreciation, and we do it that way so that we can see the historic cost of the asset here in the $10,000, but see this contra asset account and determine the net realizable value. So what is the amount of the fixed assets less that? And then the opposite side of that transaction is the depreciation expense, which again, we report it in the period of usage, and our expenses are recorded as a debit. Any questions about that? All right.
Why is the depreciation expense recorded as a debit?
Well, all of our expenses are recorded as a debit, and because they offset revenue, which we record as a credit. And then the other reason is because when we're writing down the asset, we use this accumulated depreciation account. So the next year we would see 4,000 here. And we know that anytime we record a transaction, to make the dual entry accrual based accounting system work, we always have a debit and we always have a credit. So therefore, since we know accumulated depreciation is always a credit, this would be our year 2 total. The offsetting depreciation expense has to be a debit. Did that help, see?
Yes, it did. Thank you.
All right. Any other, that's the end of my prepared slides. Yes, I want to keep my annotations. Thank you very much. Any questions about we've now completed all 3 of the primary accounting cycles. You now have the skills and the knowledge you need to really finish all of the transactions 1 through 20 in the manual aid and 1 through 18 in the QuickBooks version. QuickBooks, let me show that just briefly. Essentially, I did send, actually, let me just talk about that. I did send out on Wednesday. Where are you now? To change my screen settings really quickly. Why aren't you sharing it? Oh, well, look how the sun's starting to come out. It's not as gray and dreary anymore. Enjoy it before the thunderstorms come in. I did see that. Yeah. Let me see if I can. I know my in-studio audience can see this. I'm not sure y'all can. But this was the document I sent out on Wednesday. It shows you the crosswalk between, scroll up to the top, the manual systems understanding aid and the computerized version of the same thing. Like I said, when we started working through QuickBooks, there's 2 transactions that we do in the manual system understanding aid that there isn't an equivalent in the electronic understanding aid. One of them is transaction number 6 in the manual understanding aid. There's a physical document that comes in that indicates Eastern Wisconsin University's intent to return the goods. We signed off our agreement, sent them back that document that gave them the okay to bring the goods back to us. Here, we just do it all in one step under transaction number 13 in the manual aid, and it's 11 in the QuickBooks assignment. And then the other transaction that doesn't have an equivalent in the computerized version is the receiving of the invoice for the goods that we bought from our primary supplier. And that's because in all of the situations where we receive goods in the electronic understanding aid, they just put the invoice in the box with us. So we might on Monday start out by looking at the vendor purchase or the purchasing cycle briefly in QuickBooks. But if you wanted to work ahead and then use Monday's lecture to check your work, these are the functions you would use in this column E here. to record those transactions. So I gave you both the menu bar and then the sub menu selection in text. And then if you just want to use the process flow diagram and the appropriate button, I gave you that icon as well. It's like we've been talking about, the purchasing cycle is just the mirror of the selling cycle. So like for this transaction, transaction number 3, instead of clicking the invoice button, you would click the purchase order button and populate it the same way with all the drop-down menus and the supplies purchased here to create a purchase order to get that process rolling. Here with the receive inventory, before when we were shipping it, we would, I forget which one we did. Oh, we do like the receive payment item there when we indicated that our customer had the goods. When you are receiving here, you would go to vendor receive inventory or just click the button that says receive inventory. And the similar pop-up fields you'll see similar fields that you would populate in the same way we did when we created these invoice items and received payment the way we did before. So any questions about that? Like I said, I think we'll spend maybe 5 or 10 minutes at the beginning of class on Monday, looking at what this cycle looks like, the purchasing cycle in QuickBooks. But then the remainder of class, we'll talk about the closeout process. And like I said, you'll be responsible in the manual understanding aid for posting all 20 of those transactions and generating the documents related to that, as well as summarizing the related ledgers, journals, and subsidiary ledgers and subsidiary journals. We'll do all of the tricky month-end stuff and adjusting entries in QuickBooks to make your lives easier. Because with QuickBooks, you just press a button and it makes the balance sheet for you. In this, it's a nightmare. So I'm not going to subject you to that because I need good course evals. So any other questions? I've now kept you a minute late. But any other questions? All right.
Have a good weekend.
You too. You see our remote audience has already indicated there. So, as we talk about in our faculty meetings, voting with their feet